All right, so I told you this was the format I want you to use for the income statement, for the variable costing, which I told you last week I was very unclear about. So I'm just going to go over it one more time. So you start with sales, and then just like on the absorption costing one, where you talk about, tell me what the cost of goods sold is, we're going to calculate the variable cost of goods sold on this one. So you start with beginning finished goods inventory. So sales I gave you for this question. So sales was $200,000, right? And it said there that we sold 40,000 units. So we're going to put $200,000 here. And now, the first thing that we need to do is figure out the beginning finished goods inventory. So it says on the question, the finished goods inventory was nil or 0 on February 1st, and this was for the month of February, so this is 0. And usually you do this off to the side, so actually I'll move the 200,000 over. So we'll do a bunch of side calculations. So $200,000 in sales. We've got our beginning finished goods inventory, so that's 0. Plus our cost of goods manufactured. Now, the quickest way of doing this when you're doing a variable income statement is you've got, what goes into the cost of goods manufactured when you're doing the variable costing? You've got only variable costs, right? So you've got your direct material, your direct labor, and then what else goes into that? The variable manufacturing overhead. So in our question here, the direct material variable cost was $1 per unit. The direct labor was 80 cents and the variable overhead was 20, right? So the variable manufacturing costs per unit are $2. And if you multiply that by the number of units we produced, that gives you this, with the exception of adding the beginning work in progress and subtracting the ending work in progress, which I told you was 0. So if you did that and multiplied it by $50,000, sorry, 50,000 units, thank you, that's important. By 50,000 units, that is your variable cost of goods manufactured. So that is 100,000. Now you add those together, because this is 0, right? Ending finished goods manufactured. So actually here, goods available for sale, which I didn't make you do, but that does belong there. Goods available for sale is $100,000. Okay? So, which is basically the same as this, right? So then, we're going to take our variable selling and admin, because we still need to get to our contribution margin. That's what we get to. This is the important thing in a variable income statement, is the contribution margin. That gives a lot of information to our managers. So we want to take the rest of the variable costs, because remember we're taking variable costs and then fixed costs. So our variable selling and admin is what per unit? 75 cents. And how many units are we going to multiply it by?
40.
How many people think 40? Does anybody think 50? Why do you think it's 40? everybody thinks it's 40.
I put 50
This is
on
what
my
you sold for the bank.
Okay, so why do you think it should be 50? Why did your,
That's the total you produced, and you have to pay on the total, I was thinking you pay on the total that you made, but it's a selling and admin cost, so if we're freezing it out, then you probably only pay on what you sold.
no, what is the difference between manufacturing costs and selling and admin costs?
Manufacturing is per the products made, and selling and admin is after it's in inventory. So
There-
the first one is not an inventoriable cost, and the other one is a period cost.
Right, so what happens with a period cost? That's very good. That is exactly the right answer. Selling and admin is period costs. What do we always do with period costs? We expense them in the period. That's why they're called period costs. We always expense them in total in the period.
Oh, I was right.
So you were right.
I changed it last minute.
I will tell you something I told another one of my students. Never change your answer because you almost always do it right the first time and then you think, oh, that's not right, what was I thinking? You were actually thinking and you were right. It's selling and admins are periods and they're always expensed in the periods. So you're going to take your selling and admin expenses and you're going to get 35,000? Three.
37,500.
Oh, 37,500, thank you. Not a good math on the fly person. So 37,500. What? Oh, I thought I heard somebody. Okay, so if we take our 100,000 and our 37,500, our total variable is 137,500.
What about the ending inventory?
Oh, it was, the ending finished goods inventory was 0. It said that right here in the question.
The ending finished goods?
Oh, sorry, no, I lied. Yes, thank you. No, you're right. The ending finished goods inventory, this is very squishy. Yes, you're right. The ending finished goods inventory, how are we going to calculate that? What's the value of it?
Having
It's
10,000 times $2.
$2 times 10,000. Thank you. Yes. And why is that important?
That's what it's left, you're going to use it for your absorption cost.
Well, it's going to come into play, right? So that's different from that one. So that is, yes, thank you. So our ending finished goods inventory is 10,000. So this ends up being 90 less, I guess I do that. Thanks. Less, I don't have my answer sheet in front of me.
It's 20,000.
Oh, yeah, 20. 80. Less 37.5. Oh, actually plus because we're subtracting in here. So 80 and 37.5 is 117.5. Right? So that's all of our variable costs. So our contribution margin is our variable cost, which is 117.5 from 200,000. So you guys know more than you think. What?
In the textbook on the, in the.
8.5?
Costing, yeah, in, well,
Where?
8.3 or 8.
Give me a page. What page?
318.
318?
It actually lists it says the variable selling and administrative expenses are the unit cost, and it has times the units.
Where are you?
Sorry, under variable costing, it is at 8.2. And it comes down to the variable selling and admin expenses. It's showing 5,000.
I'm sorry. Oh, 8.2. Yeah.
Yeah, it shows 5,000 units, which is what was sold.
Yes, I agree. That is what it's showing.
And
Let me think about that one.
Answers, they always talk for what's sold.
Oh, I'll have to look at that. Because that doesn't make sense. Right? So what are we going to do with the leftover, like,
That's variable, I mean, it would depend on the
not, depending on what.
Oh, that's a good point. Thank you.
So change is good?
Change is good.
Sorry, man.
You're right. Selling expenses depend on the units sold. But they're always expensed in the period. So the fixed ones will all be expensed. So what she's basically saying is, we won't incur 10,000 more because we're not selling 10,000 more. Good point. So that's 30. That math I can do. So then what number do we get to here?
I don't know what numbers you
Oh, 110.
90,000, are we at 90?
Yeah, we're adding 80, right? We had this was 100. I'm trying to stay in this little tiny box that I've made myself here for Jenny. So it's not pretty. So we've had 100. We took away 80 for the ending finished goods. So yeah, we took away 20 for the ending finished goods inventory. So we had 80 available for sale, right? And then the variable selling and admin is 30. So we should subtract that, we'll get, right? No, this is an expense, this is an expense, we're adding these. When we subtract them from the sales, we're gonna get a contribution margin of 90. Right? Does that make sense? This is an expense, this is revenue. This is an expense. This is an expense. We take these away from this to get our contribution margin. So this is the expense. We're adding this expense to get this. And we subtract that from that to get our contribution margin of 90. Okay? So now we're going to take our fixed expenses out. And there are fixed expenses in variable costing. We expense them all in the period. Whether they are overhead or selling and admin. So what are our fixed expenses here?
75,000 like fixed overhead
Yeah.
and 20,000 fixed selling.
So fixed MOH, fixed selling and admin was 20, right? So you should have come to, so that adds up to 95, you should have come to an operating loss of $5,000. Okay? And you see how easy it is to scribble? So I don't have problem reading your scribbles, just, you know. So we can make that prettier, but I think you guys have your papers there. So what's the actual difference? So the question B says, will the absorption statement operating income be higher or lower? Let's do C. Well, the concept, you guys already answered this for me last week, so I know you know in your heads, right? So the difference between this and that is what? What's the difference between the variable income statement costs and the absorption income statement costs? What
Fixed.
the fixed,
Overhead.
the fixed overhead. And that lovely term that they like to use called deferred in inventory. So are we deferring any fixed overhead costs in inventory here?
No.
No. What are we doing with them all? We're expensing them all. That's this 75,000 right here. So, will the difference be 75,000? No. What will the difference be based on?
Based on the fixed manufacturing overhead cost per unit.
Per unit, It actually depends on the number of units that we are not selling, right? So we need to figure out what this would be per unit, right? So what is that? How do we figure out that? So the amount that's deferred is the number of units. Units and finished goods inventory. This is ending finished goods inventory. So how many units are in ending finished goods inventory? 10,000, because we made 50 and we sold 40. So 10,000. And now what is the cost that we're deferring? 75,000, which is the total amount of the fixed overhead, divided by the number of units that we produced. Right? So this ends up being 1.5 times 10,000, or 15,000. So the difference in operating income should be 15,000. Now, because under absorption costing, this 15,000 gets deferred in inventory, that means we're not showing it on our income statement. It won't show up until we sell those units, right? So will the operating income under absorption costing be higher or lower? Higher, because we are not expensing this 15,000 in the month of February because we didn't sell those things. So this one, absorption costing, will be higher by 15,000. So without even doing an absorption costing income statement, you should know that the operating income for the absorption costing income statement should be, what number? 10,000 profit, because this was a $5,000 loss. Okay? Question?
Yeah. but
What?
Then at the end of the period, we have two income
Statements?
operating income. That
Not the same?
not the same, but
But the question is, do we have the same amount of cash? Because you need to, that's a good point, and I was actually planning to discuss that. So this is an income statement. At the end of the day, does this person owe $5,000? And does that person have $10,000 in their pocket? No. Because what does the amount of money that they have to do, how does this affect the amount of money?
In terms of cash?
In terms of cash, it doesn't. Because it depends on, is this cash or is this credit? Did you collect this money or didn't you? Are these expenses cash or did you just put them on your credit card? Like, all of this boils down to how did you pay for these things and how did people pay you? So at the end of the day, and that's one of the reasons why there's a lot of, when there's always unhappy people with corporations, it's like, they didn't pay any tax. Well, the reason they didn't pay any tax was because they manipulated their income statement to show that their expenses were this, their income was this, and so that shows them at a loss or at a lower profit or whatever. There are ways that we did not talk about last week, but it was under that ethics section on how you can manipulate your income by producing more, by showing your costs in a different way, by accelerating your depreciation. They're all ways to show costs that aren't necessarily cash coming out of your pocket. For example, depreciation is a cost that you put on your income statement. It is not an actual cash flow, right? Depreciation is, I buy a desk, I think it'll last me for 10 years, so I what's called capitalize it, and I say I have this desk worth $10,000, it should last me 10 years, every year I'll put a $1,000 expense on my income statement to show the use of that over the 10 years, and at the end of the 10 years it will be worth nothing. You've paid the $10,000 for the desk. It's not costing you $1,000 a year, right? It's not a real cash flow. So while these are cash flows, the income statement shows you what the operating income is, but not necessarily what the cash flow is, which is a perfect segue into Chapter 9, because Chapter 9 will have us look at things like cash flows and budgets and see how, depending on how your customers pay, when you need to borrow money and when you can pay back your loans and so on. And we can figure those things out, and we'll be doing that in Chapter 9. So these are just ways of showing operating income, but they don't necessarily show you how much cash there is. Okay? I know, it seems weird, but. Which one do you think a bank would want to see? Well, they'd want to see a profit, right? So if you were going to look for a loan, you would probably want to show them this kind of income statement if that kind gave you a loss, right? So it would depend on your fixed. If you didn't have a lot of fixed costs, it might not make a difference, right? So it would depend, but yes, probably the absorption.
Costing was the most accepted method.
Yes, yes. Most banks would not accept a variable costing income statement.
That's what I was thinking, they would want the.
This is
they would want the
standard.
absorption. Yeah.
Yeah. But you would also want to show them that because it's more likely it would show a profit than not. Well, you'd probably just bring that one if it showed a profit. So, let's start Chapter 9. So, the next time you're doing any of those questions when you're reviewing for the final, make sure you follow the variable income format that has the cost of goods sold, like that exhibits in Chapter 8. And I think they're in Chapter, I want to say 6. They're in other chapters, so at the end of the day, they're quite similar. You just, they're a little teeny changes. But yes, thank you for reminding me that variable selling and admin expenses only vary with the units sold.
Will you be giving us a copy of that, the answer?
Yes, I printed them all out, and they're clearly on my printer because I looked through my bag like 3 times, and I'm like, oh, crying out loud.
I didn't get all that.
So, sorry about that, but yes, I will, I can post it tonight when I get home, and I can bring the printed copies next week if you like, because they're sitting in my house anyway, so I'm either gonna recycle them or I'm going to give them to you. So let's go to Chapter 9. I just wanna make sure this is actually taping. Oh, apparently so. All right. Hi, Jenny. Chapter 9. I have posted the lecture notes for Chapter 9 as well as the homework on D2L. And when I get home, I will post the Chapter 8 solution for the quiz. And I was wondering about the Chapter 9 quiz, although Chapter 9 would not be my ideal chapter for that, but think about this for next week. I'll probably do a regular quiz for Chapter 9. But Chapter 10 is standard costing and overhead analysis. It's a really, really tough chapter. It's about variances. And that is the one chapter that if I wasn't going to give you a formula sheet, I would really be mean, because there's a lot of formulas in that chapter. So what I think I'm going to suggest And you guys can think about it and let me know next week if you're game for that or if you'd like to go back to the standard quiz format. For chapter 10, what I'm considering is that instead of me giving you a quiz, that you can instead do a, I don't want to call it a self-quiz because that's not really what it is. What I'm suggesting to you is that instead of that quiz, you can, at home, prepare a question on the chapter 10 material. So one that you think would be similar to something I would test. And you have to prepare both the question and a solution for the question. And if
Make up the question?
you have to make up the question and the solution at home with your textbook. And it can't be one from the textbook. It can't be that. It has to be something original. And I know all the questions, so you can't fool me that way. But if, what?
Comprehensive a question would it have to be? Like,
Well, you've seen the questions I give you on the quizzes. It would have to be about like that. Not that hard. Like, it doesn't have to encompass everything in the chapter. You can pick like one topic in the chapter and give me a question that would be about a 10-minute question. It probably would take you half an hour to actually create a question and a solution to go with it.
Does the winner get to be on the exam?
Sure. Yes. Yes, I might actually.
You can just take one question and just change it.
No, I know what the questions in the textbook are, so you can't do that. Because I would recognize it as a question from the textbook. So the reason that I'm suggesting that to you is because some of you I know have, sometimes you're right at the end or or you're a little stressed having a quiz in class. So, it's up to you. If you want to do that, think it over and let me know next week. Because next week there'll be a regular quiz on chapter 9. So if you guys are interested in trying that, then you can do that for chapter 10. And I guess the other thing I could do is I could do a quiz for chapter 10, and those of you that choose to prepare your own question and solution can do that instead of the quiz. So give that some thought. It gives you more time to do it because you can do it when it suits you and you can do it as long as it takes you. It takes me about half an hour. It would take me a lot less time if I didn't have to type it up because it's tricky typing up numbers and they have to line up and that's a real pain in the neck. So I guess if I wrote them out on a piece of paper and I scanned them and emailed them to the girl at the admin, but I never think of that. I'm so used to not having somebody do that for me. But, so, you guys think it would be too hard? Jury's out?
I have no idea. I mean, it's hard because we've never done that. It's-
Well, I mean, you have to write the question, like you have to do the questions, solve the questions in the textbook. I would think after a while you'd get an opinion about.
And if we choose something easier?
Yeah, what if you think it's too easy?
Yeah.
Maybe-
Oh,
Do
yeah.
we know what, yeah, and then you're gonna get a real variety of what,
You're gonna take
Yeah.
a longer time to.
Well, do you guys think that you all get the same mark on the quizzes? No. Generally, unless you think everybody gets 100%, which is not what's happening.
What if we write our question and then we solve it, but we solve it incorrectly?
I don't think that would happen, to be honest with you, but
I do that.
if you got it wrong, then I would explain to you how to do it right. But, I mean, yeah, that'll happen. I don't know. It's just a thought I had.
You're saying something and you say it wrong and then you answer.
Well, I just thought it would be interesting. Okay, chapter 9. Well, there is some, I used to do that for a tax course that I had. And actually, the reason that I'm suggesting it is because you actually learn more trying to explain it to somebody else. And when you're writing a question, and you have to make sure that all the correct pieces are in the question. So for example, when I wrote on the board that you had to assume the beginning and ending WIP were 0, if I hadn't solved the question, I wouldn't have known you were missing that piece of information, right? Same thing if I hadn't given you the direct material cost, right? When you go to do the solution, you're looking for that piece of information and you're like, okay, we actually need something that you didn't give us. So the whole process of writing your own question actually helps you learn that concept better, because you will think you write down something and then when you try to solve it, you'll realize you forgot pieces. And so that'll just reinforce it. It's just a thought. You don't have to do it. But if there's a concept that you're really having trouble with, I would recommend you try that, because you will learn it better. Okay, so budgeting. Page 350. The definition of a budget is it's a quantitative, so that means it's actually something with numbers that you can quantify as opposed to a description of something. And it's used for forecasting what is going to happen with the business in the next future time period. That could be a month, it could be a quarter, it could be a year. All successful businesses budget. No one runs business that doesn't have some idea of what they're expecting to sell and produce and all that kind of stuff. You simply can't run a viable business that way. They talk about budgetary control. So the budget is the piece of paper that says we expect we're going to sell this much, therefore we need to make this much, because at the end of the day, how much you produce is driven by how much you expect to sell, right? You don't manufacture to the capacity of your equipment and then hope to sell it all. I mean, that's not the way a viable business works, right? A viable business forecasts their sale and then manufactures to be able to produce what they need to sell, because idle inventory that's unsold is in danger of becoming obsolete, broken, damaged, all kinds of bad things. So they have a number of definitions, and I think there's some that I've skipped. So on page 350, they talk about a master budget, and a master budget it's a vast, big, huge thing. And through chapter 9, we're going to talk about schedules, and they're basically little mini budgets that go into this big master budget. So a company will have a master budget that indicates their projection of sales, their expectation of cash flow in and out, their expectation of production, all kinds of things. So that all together is called a master budget. So it says in the dual role planning and control, good planning without effective control is time wasted. So there's no point in planning unless you try to control that you actually meet that budget. If, for example, I budget myself to spend $150 a month on work clothes. If I then go to the mall in next month and I spend $300 and then I spend $300 the following month and the following month after that, my budget is not much of a budget. Like, it's telling me that I've allocated $150 per month, but I'm not following it. I'm not checking to see why I'm spending $300. Like, our clothes just that much more expensive than I budgeted, and so there's no way I'm ever going to meet that $150. Am I buying things that aren't necessary for work? And so that's why I'm spending $300. So a budget in itself is not it's a means to an end. It's a way to accomplish something, but you have to control you use that budget to control your activities. It's not a thing in itself. So there is a list of advantages of budgeting. That's a useful list. I might ask you some kind of concept questions about that, but it wouldn't be, like, don't memorize this list. but it's a good list. This, point number 2, for example, says budgets force managers to think about and plan for the future. In the absence of the necessity to prepare a budget, many managers would spend considerable time dealing with daily emergencies. So budgets help them think about the future and what they need to plan for, and that helps the business run smoother. You should know what a bottleneck is. There's a definition on 351. It's anything that limits total output. So if, for example, you have a factory that can make 50,000 somethings, and there's a point at which those somethings have to go into a box, and you only have one box folder, and the box folder can only do 10 boxes a minute, then that's your bottleneck. If you can whip more than 10 boxes a minute to the box folder, that's your bottleneck, right? So one of the things that companies do is try to identify their bottlenecks and then deal with them so that they don't constrict output. So you should be aware of that definition of a bottleneck. Responsibility accounting is a good concept, but I don't imagine that I would ask any kind of exam question on it, so read it. Continuous or perpetual budgets, I don't need you to know about that, so you can skip that. Just be aware, it says on the bottom paragraph on 351, and you don't need to write this down. In this chapter, we will focus on 1-year operating budgets. That's the way that this chapter is going to be, so in any kind of a question, I'll be specific about the type of period that we're talking about. Just like in this question, I said for the month of February. So the beginning was February 1, the ending was February 28. It should be clear on any question I give you. And if, for example, on the exam, it comes to the point where you're doing a question and you don't know something, for example, like what period does this cover, and you can't figure it out from the way I've worded the question, make an assumption. And all you need to do is state what your assumption is. So if, for example, something wasn't stated like opening whip, like for that question, if you're convinced you need to know that and I won't answer your question because I think you should know the answer to the question, then just put assume whip beginning and ending whip is 0. And then just use this number in your things. Because at the end of the day, I don't want you to spin your wheels stressing or thinking about, I think I need that number, I can't find it, where is it? Just make an assumption, say what it is, and just move on, okay? Because as you know, it's not the number that you get that's important, it's the process. So on page 352, they talk about a participative budget. I won't use that term. But again, very nice to know. I won't be asking you questions about that. Budget committee, you can skip that. Skip 354, 350. Okay, when you get to 355, you may skip the zero-based budgeting at the top only. Because the real meat of this chapter starts on page 355, the master budget overview. Okay, so that's kind of where we're starting, although you should know those other terms that I highlighted. So on 355, the master budget overview, they're going to talk to you about the different, they call them here separate but interdependent budgets. So they all have something to do with each other, and one will cascade into the next, and we'll go through and show how that works. So all together, they are the master budget, but they're all these little individual ones. So the very first one that is always dealt with is the sales budget, and that's because sales drive everything, right? You need to know what you're going to sell to be able to know what you need to produce. So the very first one of the master budget is the sales budget. And you need to be able to produce any of these budgets. Unless I tell you that I'll never ask you to produce one, you should be able to produce one. So there are about, I want to say 8 or 9, but we'll get to that. So the very first one is the sales budget. And don't be too stressed by the fact that I'm going to tell you you have to produce all these, because some of them are very straightforward. A couple of them are trickier. So the sales budget is just simply that. It is a detailed schedule that shows the expected sales for a budget period. Typically, it is expressed in both dollars and units of product. Okay, so that's the the first sentence of that paragraph. Okay, so it's expressed in both dollars and units of product. So if you look at the example, I have one on page 358. It says Schedule 1, and we're going to flip back to 355, so don't get too stuck on 358. But you see how at the top of that, it says Harrigan Freeze Inc. sales budget for the year ended, and it's in 4 quarters. So it shows 4 quarters, and then it shows the year. So I might ask you, for example, to prepare me a monthly budget for the first 3 months of the year. And then that would be your instruction for the rest of any budget question that you're only dealing with those 3 months, okay? So don't assume it's always going to be quarters or a full year or whatever. I'll tell you what the period is that we're budgeting for. So while we go through this, where is that? Oh, here it is. We're going to do case 9-29, because 9-29 is a big, humongous problem at the end of the textbook. I'll just tell you what it is. We won't flip back and forth to it. So 929, oh, I should have picked the page. On page 401. It's a big, humongous question, right? So my first piece of advice to you is if you saw something like this on the final exam, don't be freaked out by the fact that the question takes almost an entire page, okay? Because one of the things that I also want you to be able to do is if I give you a question and, for example, I asked you, say I gave you this entire question and I asked you to tell me what the cost of goods manufactured was for March, you should be able to dive into this information and say to yourself, oh, I need to find the direct material cost per unit, I need to find the direct labor cost per unit, I need to find the manufacturing overhead cost, and then I need to know how many units they manufactured, right? So you need very little to be able to produce that, right? Plus the beginning and ending WIP. But you need to know what it is you're looking for so that in a big question you can find it. So that's my advice to you is if you see a big question, don't worry about the question so much. Just think about what you need to get out of there and go looking for it in there. So in 929, it's actually very nicely laid out. It tells you in A, like the question says, Garneau Manufacturing Limited produces and distributes a special type of chemical compound called I don't care what. And the information has been assembled to assist budget preparation. So we're going to make a budget or 1 or 2 or 6 or 7. The company is preparing its master budget for the first quarter of 2012. So a quarter has 3 months in it. The budget will detail each month's activity and the activity for the quarter in total. So what it's telling you is that they expect you in this question, they want you to do the first quarter. So the first quarter is the months of January, February, and March, and it says the total for the quarter. Oh, I had this feeling I went off the board. Yeah, I did. I'll have to move over a bit for Jane. Okay, so it tells you that you need to do January, February, March, and then the total, right? That's what that's telling you. So now, the sales budget, it said, was expressed in units and dollars, right? So, the selling price is $60 per unit in 2011 and will not change for the first quarters of 2012, the first 2 quarters. And we're doing the first quarter, so our selling price is $60. So, selling price is $60. I'm just making a note there for myself. So it says, if you flip to 402, the question keeps going, and there it says required. Prepare the following budgets for the first 3 months of 2012. A sales budget. So that's what we're going to do first. So all you would do is, you've got your format here. You need to tell me the sales in units. So you can see that that's been given to us in this A part of the information. So what's the expected sales in units for January?
11,000.
What?
11,000.
11,000, and February?
10,000.
10, and March?
13.
13, so what's my total?
34.
34,000, okay. Now I need sales in dollars. So that is 66,000. 60,000. And this is 1878, right?
An extra zero on
700.
Oh, thank you. I'm really bad with zeros. Thank you. So then whatever that total is, it's lots. With some zeros, right? Well, 6 and 6 is 12 and 7 is 19, so let's say 19, I'm sure it's more, but anyway. So whatever that number adds up to, right? So this is my sales budget. That's all there is to it, okay? Now, it's very important that you show your work. And in this question, the only way you could do that is by doing this part. Times 60, times 60, times 60. Okay? But there's not much to that, right? So that's a sales budget. So then the next part of Schedule 1, if you go back to 358, is the schedule of expected cash collections. This is my favorite part, but this part is a little bit trickier. It's not hard, but you really have to pay attention. So we are going to go back to the question, because it says in, let's see here, in the second paragraph under sales budget on 357, if you go back to 357, it says, the sales budget is constructed by multiplying the budgeted sales in unit by the selling price, which is what I did there, right? Schedule 1 contains the sales budget for Harrigan Freeze for 2012 by quarters. Notice from the schedule that the company plans to sell 100,000 cases of popsicles during the year, with the sales peaking in the 3rd quarter. So they've just shown you that the timing for the Harrigan Freeze, which is this popsicle company that they're talking about in the textbook, that actually shows you that they're expecting the most popsicles to be sold in the 3rd quarter, which will impact cash flow and other things like that. Okay, so you can get a lot of information out of there. Then what they're saying in the next part is that the schedule of expected cash collections is prepared after the sales budget. It's not considered to be part of the sales budget, but that's where often it'll ask you for it in the question. So the expected cash collection, in the textbook, they talk about experience has shown for Harrigan Freeze that 70% of sales is collected in the quarter in which the sale is made, and the remaining 30% is collected in the following quarter. And where does it tell you about cash collections? Okay, normally a question will be a little more, like, that is specific, but they'll usually talk about cash sales versus credit sales, because this is actually telling you just when the cash is collected, I think, to simplify the example in Schedule 1. So if you look at Schedule 1, you'll notice that for the first quarter, I think, is this a new company? No. Okay, so what they're telling you is that the first quarter sales, if you look at this, ignore the accounts receivable beginning balance line, because that's actually has nothing to do with, I mean, they're trying to show you something else here. So the first quarter sales, if you look at that, it says 200,000, which is the number from quarter 1 total sales. That's the 200,000, right? So it's 200,000 times 70%, because it said on the preceding page that 70% of sales are collected in the quarter that the sale is made. So 200,000 times 70% is that 140, and then it's got comma 30%, and it's got a little star. It says 30%, oh, what they've shown you is that the first quarter sales are in blue, okay? So the 140 and the 60 add up to that 200, but they're telling you that 70% is going to be collected in the first quarter and the remainder is in the second quarter. So I actually like the way they've shown that there. But they're also telling you that cash collections from, yeah. So that $90,000, that beginning balance, it says is from last year's quarter's sale. So they're just tying it into the previous example because the textbook likes to tie their stuff all together. So what they're trying to tell you is that if 30% is collected in the quarter following, that means that you'll always collect some from last quarter, right? So that 90,000 is the 30% from the preceding quarter. And you always need to take that into account when you're doing these cash collection schedules, because whatever month you're starting in, unless they said that was the first month of business, there's going to be money coming in from the previous month's or year's sales, depending on what the question tells you. So we're going to do that exact same cash collection schedule for this question, because that's the second piece. And in my little solution that I've prepared for 9-29, it's a little different than what they did in the textbook solution, because I wanted to do the cash collection part next. So let me just find my, because they did it kind of strange. So in the question on 929, which is on page 401, it says cash collections. If you look at F says, see, this question is more common. It talks about credit sales. So if a sale is not a credit sale, it's a cash sale. So a credit sale means people put it on their credit cards and they're not gonna pay for it when they're at the store, right? So we have our, I'm gonna take my sales budget and I'm just gonna put the January sales dollars up here, January, February, and March. So the sales dollars are 660, 600, actually, I'm gonna do that. You guys are familiar with the K, right? K stands for 1,000. So I'm gonna put 660K. And then this is 780. Okay, all right, so that's the sales for those months. And now we've already got this down. So we are gonna do the cash collection budget. Because this will tell the company when they will not have enough cash that we're going to make another budget for that anticipates, based on our production needs, how much money are we going to have outflowing for our direct material, our labor, we have to pay our salaries. You know, when are we going to have enough cash and when are we going to need to borrow? So the way we are going to figure that out is we're going to do the second part, which is, they don't call it number 2, so I'm going to call it 1B, which is the cash collection schedule. So in example or case, this is case 9-29. So in case 9-29, they tell us that credit sales are 60% of total sales, right? Credit sales are 60%. So credit sales are 60% of total, which means that cash sales are 40% of total, right? Because you have to, it's one or the other. And then what do they tell us about the collection of credit sales? It says the company collects 50% of the credit sales during the first month following the month of the sale. So credit sales, %50 in month plus 1, and 50% in month plus 2. So what that means is, for January, let's say sales were 100,000. Let's say they were $100, period, just for an example. So of that $100, $60 is credit, $40 is cash. So the cash collection for January is going to be based on this. So credit, well, usually you always start with cash. So the cash collection for January is going to be $40. And the credit collection is going to be how much?
Half of 60.
It's actually going to be 0. Month plus 1, it's in the following month. So there are no collections of the credit sale. In February, which is month plus 1, right? This is the month following the month.
Oh.
You are going to collect 50% times $60 or $30. And this, so for January's sales, you're not going to collect any cash here for these sales. I'm only talking about these sales. It gets more complicated because in February you're going to sell some too, right? But we're not going to introduce that right yet. So for this $100, you're not collecting any of the cash in February or March. but you're gonna collect 50% of the credit sales in February and 50% in March. So when they say in the month following, they mean the next month, and in the second month following, they mean this month. So on the exam, does that make sense? Yeah? Okay. So,
Where did you, sorry, can I just ask one thing?
yes.
The $100 sales, did it say it somewhere, or did you make that up?
No, this is an example. We
Okay.
haven't done this one yet. No, this is an example. I want to make this simple because it's going to get complicated once we start doing that cash budget.
So why
Yeah.
is the cash zero in the very portion?
Because I'm only talking about this $100 that we sold in January. This is cash from January's sale. Okay? This is only cash from January's sale. So all of the cash is going to be collected in the month of the sale, but the credit is going to be 50% here and 50% here. Okay? Just like this is zero here, these are zero here. Because all of this, so in January, we're going to collect $40, in February, we're going to collect 30, and in March, we're going to collect 30, and that equals 100, which is what we sold in January. So that's relating to January's sale. Okay? So if, for example, under this example, in February, we sold 200, actually, I'm going to get a different color pen. So in February, let's say we sold 200. Jenny won't be able to see that. That is a terrible marker. Let's try one of these. Okay. So in February, we are going to sell $200. That's better. So we're going to continue our cash collection. So in February, well, let's leave that there. So in February, we're going to collect some more cash. So February, we've got 40% of the sales are cash. So how much cash are we collecting in February?
$80.
$80. So 40% times 200. We're collecting $80. And how much cash are we collecting in March from this sale? None. Right? And what's the next month? We need February, March, April. And how much cash in April from the February sale? None. So now, how much credit, or how much are we going to collect in February of credit sales? How much credit sales are there? We have 80 cash, so 80 cash, which leaves 120 credit, right?
So you have no credit in February because that's the month you sold.
Correct. So no credit collected in February from that sale.
Right.
So now, with the February sales, they didn't change the January cash, we're adding 80. So now we will have collected 110, right? From the January and the February. So how much are we collecting in March for the credit sales in February?
50% of the, I can't see the numbers anymore.
50%
Of the 120.
of the 120. So 50% times 120 equals 60. So we're going to
This
collect,
is going to be so hard to keep track of if you,
well,
like,
actually,
I
what,
can't even follow it up in here and I know what we're doing.
yeah, but that's the idea of creating a cash schedule. So again, in the exam, it's really important to give me the formulas so I know where you got the number from, because once you start doing all that, and what you might want to do is you might want to, have you noticed in, I think it's in the textbook too, they used to have, when we were doing T accounts, they would have a T account, oh yeah, I've seen this. And then, so say they have a number here, 100, and then here they have 8. And then down here, like somewhere else on the page, they'll say 100 times 1 times whatever, right? So feel free to do that if you want to keep it cleaner. Okay? Because yeah, this could be hard to add up. But again, if you add it up, like, it's not the adding I care about, right? But you will want to make sure that you have some kind of a number. Like, you can't just put formulas down, because these budgets all lead into the next budget, right? So this budget will tell me how much cash I have, and then I might want you to tell me, you know, what month am I going to need to borrow money and how much am I going to need, right? And so you'd prepare me a production schedule, or look at the production schedule that I give you and see that you have cash, a cash balance of 50,000, your production costs are going to be 60, you're going to need to borrow 10, right? So I might not make you do all the work for all that, but you should be able to tell me if you calculate, you know, that you're going to get 60. You know, if this is your production cash flow that you need, you know, what do you have to do? Oh, I'm good, I have 70. No, I only have 50, I gotta borrow. That's what I would expect you to be able to tell me, right? That's the whole purpose of the budgets, is to be able to anticipate what you need to do to make things work. So, that is the example. So I'm gonna get rid of this part. So in the question that they had, they said that cash sales are 40% of the total, credit sales are 50% in month 1. In the month following, so I've written down month plus 1. So I can just say following month if that's 50% in the following month. And 50% in second, I don't know, how do you want me to call that? Second following month?
2 months plus
Call it 1 month after, 2 months after. I don't know.
Sure. I find sometimes that the way to express these things is a bit awkward. 1 month after sale. 2 months after sale. Okay? Okay, so let's do this one. Oh, that's not really much better. Okay, so we've got our 3 sales projections. So we are preparing the cash collection for which 3 months?
February, March.
January, February, and March. So January, February, and March. So the first thing, the easiest thing to do is to calculate the cash. So you usually do it first. So what is the cash that we're going to collect in January? Give me the calculation. 660K times 40%, correct.
264.
264K? I agree. So that will be 264K. Okay. What is the cash that we're gonna collect in February?
Okay.
600 times 40%.
600 times 40%. Very good. And I did that last night, 240. And what about March?
780 times
Good.
40.
780 times 40%. I'm doing these in 3 different colors so that we can, just because I love color, so that we can, you know, see, so these sales, so 780K times 40%, which is a bigger number, 312, right? 312K. Okay, so in fact, I'm gonna make this one blue, and I'll make that one red, so that we know where these numbers are coming from. Okay? So, now we need to do the credit sales. So, the credit sales for January, how many are we collecting in January? None, correct. So none in January, so how much in February?
Let's see, credit, 60% of.
396.
Total.
Okay, we'll start with, you know, it's,
396K.
ooh,
But it's only half of
ooh, who said that? Nice
No,
work.
yeah.
So the easiest way to do this is to have a system. So my system is, I start with the sales, so my sales are 660K times, what are my credit sales? My credit sales are 60%,
Divided by 2.
and I'm only collecting 50% in the month following the sale. And that is 216? Is that right? 198?
Yeah.
Oh, I forgot something. These credit sales are from January.
Yes.
Are we collecting any credit sales in January?
No.
No.
Yes, we are. If you look at the question
From December.
from December. Yeah, what? Exactly.
12,000 units.
Exactly, 12,000 units. I don't have any more colors. Oh, I do. I have a green one. Yay! So, from December, we have to collect, so the sales will be 12,000 units. So 12K times $60, because that's how we got that, right? Times, how much? 50%, right. Times 50%. And now, is this the first month or the second month following the sale?
Second, because they have November in the chart. Oh,
What
wait.
month?
But that's 12,000 in December.
This is, yeah, isn't the 12,000 from December?
Yeah, but there's 10,000 in November, so we probably have another month there.
That's
in
right.
the second month.
So from December, it's 12K times 60 times 50% times, what are we forgetting? Before the 50%, 60%. 60% are credit sales. We're collecting 50% the month after. And whatever that number is. And then from November, it's gonna be, is it 10K?
It's 10,000 units, yeah.
Yeah, so it'll be 10K times $60 times 60% times the other 50%. Like, in a way, it's too bad that they've split this 50-50, because it would actually be a lot simpler if it, like, it would be a lot easier to realize what you're doing if it was, for example, 70-30. So, wow, you have to do it this way, like, if the question says 50-50, but in my exam question, which I'm sure I'll give you one of some sort, this is like highly, highly likely to be on the exam, because I love this kind of question, and it's a pain in the neck. But, you know, I wouldn't do 50-50 because it's too hard for the marker to tell if you know which 50% you're using, right? Because this is all about concept. Do you know where these cash flows are going, right? So from December, there'll also be credit sales here, right? 12K times $60 times 60%. Times 50%. So whatever you had here, you'd have there. So, right? Because December, you've got, I'll change these back, but because you have 50% the month following the sale and 50% 2 months following the sale. So this is the month following, and this is the second month following. And so that's the way you do a cash budget. You basically, there's no purpose in continuing. Like, you get it, right? You need to plunk the right things in the right place. So when you're doing these questions for homework, I'd highly recommend you use colored pens so that you can see where you've put stuff. You know, and then when you miss a piece, you're like, oh, right. But they're not hard. You just have to remember to pick every piece up. And so just like these are bleeding in from before, the credit sales here in March, we have cash sales. We'll have credit sales collection from February, the month before this, and we'll have credit sales from January, but the November and the December will be done, right? Because there isn't any November here. This is the second month, so the November one's already done, right? And the credit sales will be collected here, but we're not showing that. So this is the cash collection schedule. So this is definitely one you need to know. How are we doing for time? 25 after. Do you want a break or do you want to do another schedule? Break? Do you want to have your exams back before the break?
Sure.
Okay. That'll give you something to do. Are you going to be able to think about schedules if I give you your exams back? Sure. Okay. So on the whole, I was very pleased with everyone's exam. Good work. I think I already, did I not put a news up that said the median was this? And oh, I will. So let's see where you are. Good job. You guys did very, very well. I was really worried about this exam because you guys did not do very well as a general rule on the last quiz. And you didn't do super fantastic on the quiz before that either. So I was starting to get concerned about my teaching. But we redeemed me. Nandini. Good job. That's yours. And I bring the marking key? You know what I'll do is I want to talk, oh darn it, Jenny's not here. Okay, for those of you that were here, I think everybody was here last class, I want to actually talk about a couple of these questions. So the first comment I had was everybody did a very good job at the schedule, cost of goods manufactured, nice work. The skateboard question. Skateboard question, I went back and remarked because if any of you actually looked at the customer margin schedule in the textbook, you will see that one of the important pieces that you would put on a customer margin schedule is the actual name of the customer. Just like you put your name on your exam, how would you submit that to somebody if you didn't have the customer name on it? So I originally did not dock marks for the title, like the name not being there, but then I thought, because I thought you all didn't do that, but some of you actually did do that, so I thought, well, that wasn't fair, so if you didn't put the customer name in, you only got 7. Oh yeah, and the other thing is I threw in, you'll notice on the answer key that you did not need to use the 0.7 direct labor hours per skateboard because I told you what the labor cost per skateboard was. So that was another one of those little things where I need you to know what you're doing. I need you to know that when there's a piece of information in there that doesn't belong, you should ignore it. So make sure you don't always think that you need to use every piece of information that I give you. So if you, in fact, used that, you would have lost some marks. Break-even point, most people did that fantastic. Let's see. Question 4. I should be looking at the question when I'm talking about it. So question 4. Oh yeah, this question. Clearly, I have not taught you guys how to do this yet because this is like, I asked this on the quiz and you guys didn't really do it great there. And then I asked it again on the exam, hoping that you guys would have done it better after I had explained it, but apparently not. Some of you did. But for the most part, most people still are struggling with this concept. So my tendency is, in case you hadn't noticed it, is if I think you don't know something, then I'll test it again. So I think you should be prepared for this to be tested again on the final. So the question is, and this is almost the exact same question I gave on the quiz. I've given you question 4, the following pertains to activity and costs for 2 months. So I gave you costs for June and July. I gave you activity level. And that was 10,000 in June and 25,000 in July. Now, the variable costs that I gave you were 15,000. Now, I asked you to calculate the variable costs for 25,000. Somebody needs to answer for me what a variable cost is. What is the definition of a variable cost?
Proportional?
It's proportional to what? To the activity level. So a variable cost is a cost that changes with the activity level. So if the activity level goes up, the cost goes up. If the activity level goes down, the cost goes down. So it depends on your activity level. So if you want to calculate this, you need to know the activity level for this cost will be the same as the activity level, like the proportion will be the same. So the way you figure this out is you take your variable costs, you divide them by your activity level, and that tells you what the variable costs per unit are. Per unit. So now you know that you're making 25,000 units. Question for the mixed cost question. So you know you're making 25,000 units, so now it's 25,000 times your variable cost. And I mean, you don't even have to do, you can just put 15,000 over 10,000, and that gives you 35,000, does it not? 37.5? Thank you. Again, math. Okay, so that is how you answer the first part of the variable question. How do you calculate that? Okay, you need to determine what your variable cost is per unit and then multiply it by the number of units. So now we know the variable cost portion is 25,000. I gave you a fixed cost portion of 15,000. What is the definition of a fixed cost?
It occurs regardless of the activity.
Correct. It doesn't matter how many units you make, it stays the same. That's why it's fixed. So this is 37.5. So if it's 15,000 for 10,000 units of production, what is it for 25,000 units of production? 15,000. And I didn't give you the mixed cost for, okay, so it was 10,000 for this to give you a total of 40,000. And I didn't give you the mixed cost. That was the other thing I asked you to tell me. Oh, yes, I didn't actually ask for this, but you need it anyway. What I asked you for in A was this. What are the mixed costs for July? So I told you that this was 70,000. So therefore, to get that number, you now just have to subtract this number and this number from 70,000. And what does that give you? 17.5? Okay, so 17.5 is the answer to A. Okay? So this is the answer I was looking for in A. Is that correct? 30, okay, 17.5. Okay, so then the trickier part of the question, which was worth 2 marks, was the part almost no one could do. So what I asked you for was to determine for me what the variable portion of July's mixed costs were. So what I'm looking for is not this. I'm talking about July's mixed costs. That's this number here, this 17.5. That is the mixed cost. Do you remember when we talked about mixed costs? I'm going to get rid of some of this so I can do this. Mixed costs are made up of what 2 different kinds of costs?
Fixed and variable.
Fixed and variable. So mixed costs equal a fixed cost portion and a variable cost portion. Right? So obviously the variable cost portion depends on the number of units that are made. So somehow that ties into here. And then you have to decide this part. So you're trying to figure out for the July mixed costs, which we figured out were 17.5, what the variable portion is, okay? So the way that you figure out the variable portion of something that has a mix of fixed and variable is you take the difference in cost, so 17.5 minus, what was the mixed cost here? 10. Over the activity level change, so 25,000 minus 10,000, and that gives you 7,500 over 15,000. None of these are dark. I'm getting frustrated now. Which is 50%. 0.5. So 0.5 is the variable portion of the mixed cost. And if I had asked you to produce me a formula for the mixed cost, it would be, you'd have to figure out this portion. So the mixed cost, so now we know 17.5, you then have to figure this out, and you do it by saying 17.5 equals the fixed cost plus 0.5 times 25,000, or you could get it the same way by going, the mixed cost is 10,000 equals the fixed cost plus 0.5 times 10,000. Because remember, you can use either this mixed cost for June or the one for July, and you will always get the same equation, and this will be the same as well. So when you do the math, it will tell you what the fixed portion is. But I didn't ask you for that. All I asked you for was this, the 0.5. Okay? So remember, whenever you have a situation where I'm asking you to separate out the fixed and variable portions, make sure you're using the mixed cost that I'm asking you to evaluate. Because somebody, I think some people told me, you know, the variable cost portion was 1.5, because that's what it was for this. The variable cost was 1.5. But that's not what I asked for. So make sure when you do a mixed cost question, you concentrate on the right cost. Okay? All right, why don't you guys take a break, and then if you have any questions, you can ask me later. It's harder to ask me questions when I didn't give you the solution, which I don't know if I have with me or not. But anyway, let's take, I don't know, 15 minutes? That sound okay? All right, so at 10:02, we will start again. Pause.